a lot of founders too, they believe like raising money is the be all end all of, it's success. Actually, I consider like every time you raise it, it can actually, it's almost the opposite of success. It means you couldn't do it without the money. And, and I, I raise money. So I've raised probably $70 million now. And,
Yeah.
I've been in, but anyway, that's my belief after doing it.
They say it's lonely at the top. They're right. But you don't have to scale your company alone. Welcome to the Scaling CEO. I'm Glenn Gow, the CEO Success Coach. On this podcast, I sit down with top performing CEOs to uncover the hidden patterns and frameworks behind their success so you can avoid common pitfalls and accelerate your company's growth. Now, on to the show.
My guest today is Jon Nordmark, a serial entrepreneur who knows a thing or two about scaling from the ground up. He co-founded eBags.com and as a CEO, scaled it through the dot-com bust and the aftermath of 9/11, selling an incredible $1.65 billion worth of bags before it was acquired by Samsonite. But he didn't stop there. In 2015, long before the current hype cycle, he co-founded Iterate.ai, diving headfirst into artificial intelligence. Today, as the CEO of Iterate, he's empowering global giants like Ulta Beauty and Japan's largest bank with a patented low-code AI platform. He's been named E&Y Entrepreneur of the Year, and his company, Iterate, has racked up awards from Inc. magazine, Fast Company, and the Colorado Technology Association, which also named him CEO of the Year. Jon is a true operator who's gone from scaling a massive e-commerce business to scaling a deep tech AI company. I'm excited to dig into what he's learned along the way. Jon, welcome to the show.
Thank you very much, Glenn. Nice what you said about me.
Well, it's true. That's the good news, right? So
Shows how old I am.
let's go back and let's start with eBags. So you scaled it through the dot-com bust and through 9/11,
Yeah,
achieving 34% compound annual growth rate during those final years as a CEO. Now, looking
yeah.
back at that intense period, what's the one scaling insight that if you knew it then would have saved you months of pain and agony?
Wow, one scaling insight. Before I answer one thing, I'm gonna tell you, I've been asked that question before, and I've always said, it's like this constellation of stars that all come together. If one of them goes wrong, the whole thing kind of seems to have problems, and figuring out that one thing is often really, really hard because.
Yeah.
But I would say the number one thing, even in this AI world, is getting to work with great people. Like everything involves the people that you bring together to build a business. And it's this collection of not people who are the same, but kind of a diverse set of people with
Yeah.
different skills
Yeah.
that I think are essential. And then there are a bunch of decisions you make along the way, that impact the company. But I think if you get the right people and build the right culture, uh, that's when you have the best shot at succeeding.
I love that answer. One of the things I commonly say is to CEOs that are past the very, very beginning stages. I say, your number one job
Yeah.
is to build a great leadership team.
Yeah.
And by leadership team, I don't just mean, I say leadership specifically, not management team, because you need to build a team that knows how to scale.
Yeah.
And then your second most important job is to lift that team up, get the most out of that team, to be the person who enables them to succeed. So I
Yeah.
completely love your recommendation here.
I heard someone just yesterday, Glenn, say to me something about hero culture. And I thought, what an interesting, or he didn't call it hero culture, it was hero leadership or something like that. But I thought, what a great term, but what a terrible way to build a business. Like you can't do it if you're the hero. Like
Right.
it's actually an anti-hero thing. Because in the end, if you have 50 heroes, in a startup team, you're going to win. But if you have 50 heroes, like no one's a hero, right? It's a team. And The best thing for a guy like me is when I know I've built a great business is the day I'm no longer needed.
Oh, that's
And
fantastic.
yeah, and
I'm gonna use that quote with my other CEOs, so let them know what you said. I like it.
yeah,
So,
yeah,
John, you've gone from running a massive e-commerce brand to running a deep tech AI company that serves major enterprises.
yeah.
So when you look at how you've shifted, what's the biggest blind spot you see CEOs have when they try to make a shift to scale their companies?
That I think I mean, some of the mistakes I think that I see people make are it can be there are a whole bunch of them, but one is, trying to be the most important person in the room. That's kind of the hero culture
Yeah,
thing.
yeah.
Another one is being careless with money and cash, and what I mean about in that way, we used to say at eBags, you have to live longer than the learning curve. And, we used another one, mind over money. And what I've loved about so I've built two companies basically. And the first one, we raised real venture capital, from Benchmark Capital and TCV and like top tier venture firms out of Silicon Valley. And that's one way to do it. The other way to do it is bootstrapping. And Iterate is more of a bootstrapped company. Now we've raised $10 million today, but we didn't do money raise until we really had our feet on the ground and actually built a business that had over 10 million in revenue. That's when we really started to raise and
Right.
we
Which
needed
is
to get
very
it.
unusual to wait to that
Yeah.
point.
Yeah, but and what I've learned over the years is this is maybe a good answer to your question. Hopefully, the board that you build can be major league destructive or helpful. And I think companies or founders need to be very careful about who they put on their board because what I've learned over the years is the board makes the most strategic decisions a lot of times, or at least the ones I've been involved in. They try to weigh in. A
Right.
lot of times they don't have any real operating experience in your domain. They may think they do, and I've heard this called swoop management, or people come in for every 3 months. They think they know everything about your company. That they weigh in on really the most important decisions. And and they can put your company on a path that may not be the right path, or they may
That's right.
not let you go in a direction that you need to go. And
That's right.
so my current company, our board is really tiny. It's my co-founder and me, and we've done that intentionally, partly to be able to make decisions really fast. And I think it's played out really well in the AI world because the thing is moving so quickly. We don't have time to go get permission to try different things,
Right.
or yeah, we just make moves and it's worked really, really well so far. I'm not saying that it's the only way to do it, but it's really worked for us. And so,
Well, I love that, and so you said it's you and your founder,
mhm,
um, which means you don't have external investors on the board, and what
right.
what I often explain to CEOs is that, look, as much as you would love to have the board fully aligned with you as the CEO,
Yeah,
they never will be, and it's not because they're not good people, they could be fantastic, but they have different objectives, they are measured in a different
right.
way, they're looking for different kinds of outcomes, and so we have to be very cognizant of that
Yeah.
when building a board, when asking questions of the board, and when we're processing the advice we get from the board. So it sounds
You
like
know, you're
you have figured this out.
you're 110% right. And I can tell you've been around, you've seen these things happen, but I didn't really understand that when I built eBags. I was it was with a team obviously, but I was a young guy and I had no exposure before to boards. I think I viewed them as a lot more I gave them a lot more uh power than maybe I should have. Uh
Very, very common. Yes.
yeah. Although at the same time, they do have, some of them have a lot of power. And I think when you're raising money from like venture capital, and you understand venture capital, like you've lived in that environment.
Right. That's
But
right.
when you're raising money from a venture capitalist, if your documents are written in certain ways, it gives the investors a lot of power and power over the founder CEO's job. And that's why I think you just got to be, or one of the reasons you just got to be incredibly careful when you're raising money. I think a lot of founders too, they believe like raising money is the be all end all of, it's success. Actually, I consider like every time you raise it, it can actually, it's almost the opposite of success. It means you couldn't do it without the money. And, and, and I raise money, so I've raised probably $70 million now, and
Yeah.
I've been in. But anyway, that's my belief after doing it. A lot of times, I'd rather go without money than with money, if at all possible, because I think also not having money forces invention. And actually, we've been incredibly inventive at Iterate, and that's one of the reasons. But the board itself, like if you give them too much, I mean, if they have a lot of power, it just that's the reason it just can put a whole different dynamic on the company. And the minute you raise money, it's like a new starting point.
Yes,
You're not like achieving something; you're actually resetting the start.
that's right.
And yeah,
So on another topic here, how did you? So you lead a company now with what, roughly over 100 employees.
yeah. Mhm.
So how did you personally scale your own skills and mindset to take this leap from physical products to cutting edge AI?
It's my team, my partner again. I started this with a guy named Brian Nathan, and he is an enterprise software engineer, architect, and he's got a business mind. Like but he cut his teeth at Apple, and he worked in what's called NPI group, new product introduction group at Apple under Steve Jobs. He didn't work right for him, but he was part of a 60-person team that built the first iPhone.
Yeah,
He worked on his team was 7 people. Those 7 people didn't know the other 53 people. They would segment them out like, into these little small pizza team pods. Brian led actually 2 pods, but it was run as one pod kind of. But their job was to build all the security for the first iPhone and then also tether it with AT&T, which was their launch partner.
yeah,
And he's a cryptographer, he's a math expert. But anyway, Brian, he's an he's a software guy, and I'm a business person. I don't write code. And I've sort of, I mean, I've told him this. My job is to enable him as much as I can. Like,
yeah.
help him get the money he needs, help him hire the people he needs. Even though I can't interview him for their skill sets, what I can do is support him in trying to attract the best talent he can, whether it's with stock options or pay or culture, like give them, I can be very hands-on. But but as long as things are going really well and people are experimenting a lot, I'm very hands off. And I think they like that,
That's great. That's great.
you know.
And so I wanted to ask you about, you said you've reached somewhere in the range of 10 million in either ARR or
Mhm.
revenue,
Yeah.
with raising very little money until recently. So to think about the audience we have here who does
Mhm.
effectively burn piles of cash to get to your point. What is the core operating principle that have enabled you to get here without burning
Yeah.
that much cash?
I think one of the reasons I did this, I went through a situation at eBags where we raised a ton of money. We raised, when we had 2 million in revenue in a retail business, we raised money at 142 or 147 million valuation. It was just huge.
Nice.
What that did though, then all of a sudden the dot bomb hit, in 2000, 2001. And when we needed more money, guess what? It wasn't there.
That's right.
And then what I learned was that if we had to raise money, and this is how naive I was, we would have to go through a down round that would basically wipe out all the employee stock, all the founder stock. We all lose all our money. And then we pulled it off and made the company profitable without raising money. It was kind of a miracle. Like I know Benchmark thought what we did was like backflips to make it work. But it was just, it was full of stress because I had to lay off 25% of the workforce.
Oh, that's hard.
And they're all very capable people, and to look people in the eyes and have to lay them off when they don't deserve it. It's just it changed me as a person. And
Yeah.
but but during this period when companies were trying to acquire us, and we had a number of those happen. One was Liberty Media, and the saw other companies getting acquired where they'd never raised money. One was bodybuilding.com, another one was backcountry.com by Liberty Media. And what I realized is they had all kinds of latitude to sell the company that we didn't have. We had
Oh,
to get all these permissions through our venture firms, and they
right.
needed, because we came through the dot bomb, you're part of a portfolio, you're not your own company.
Yeah.
They look at you as a portfolio, not as a company.
Right.
And we had an offer at one point to get almost a 10x return 6 years in for all of our angels and everyone. And guess what? None of the venture people would take the deal. And because they had so many disasters happening during that period, they needed us to produce, you know, at least 20x. And so I would have made a ton of money, like all my partners, all the angels, but the venture firms wouldn't move. And sort of that's what sort of turned me into this person who just wanted to build without money the next time. And we've done it, and now we're raising money again. But the thing is, we're in a lot better spot now. Getting to where we're at, what we did is we did a lot of consulting. So we created a services part of our business where we would go and teach companies like how to work with startups and how to, and we build things for them, build software for them, custom software. But that paid our way, and that got us up to over 10 million in revenue.
Wow.
We raised a little money during that time, but it wasn't. But it was more because we had hired some people that needed fairly big salaries, and they're not here anymore. It's kind of the funniest thing. The entrepreneurs are still here, and
That's great. So
yeah,
John, let's bring us to the present day. And I am a massive proponent of AI. I encourage all of my CEOs to incorporate AI into their operations of the company, certainly into software development, but also
yeah.
then into the product that they're offering their customers. Now, your company is positioned to lead the next wave of agentic AI.
Yeah.
How will networks of autonomous AI agents fundamentally change the playbook for how a CEO thinks about scaling their operations and their team?
Internally, that's a great question, Glenn. And I think there's going to be radical change in companies due to agents and a lot of the new AI that's coming out. And we're doing it internally already. We built, how you got Windsurf and Cursor and
Right?
those types of products. We built our own. It's called Agent One. We built it for ourselves internally because Cursor and Windsurf weren't doing what we wanted it to do.
Hmm.
And that is build enterprise grade software agentically, not like task by task, piece by piece of
Sure.
software, but
Sure.
something that could run it and not stop. Like it could build for hours without stopping. But also it needs to have like security and unit testing and stuff like that built into the platform. And so we built something called Agent One to do that. We're now letting other companies use it. Startups can use it for free. It plugs into Visual Studio, the normal, and you don't have to pay for it. And then we're selling it to big companies. But anyway, that's radically changing the way we work inside Iterate itself. And it was built by our engineers for our engineers. And like my co-founder Brian, he's primarily a business person. He doesn't code very much, but now he can code. It's like he's two people,
Yeah.
or maybe it's more like he's 10 people, because he's Brian, the business guy that I work with every day and talk to every day, and he's doing sales calls and talking to Dell or Qualcomm or Intel or Ulta Beauty or whoever. But then there's Brian that sets all these prompts before he starts working in the morning, and then the 10 developers go to work. It's the CISO, the a couple developers, and the QA people that he's actually instructed to do the work through his English language prompts. And
Yes.
then he does his day-to-day job, and then he comes back in the end of days and sees what these 10 virtual developers have produced.
That's
And
amazing. That's
yeah,
amazing.
it's fairly mind-blowing. And so that's created quite a bit of change in our company. And we built it primarily because we just wanted to get more done, but we felt like we're going to need to do it to remain competitive going forward and to move at a speed that, you know, that that the world's going to require going
Yeah.
forward.
Yeah.
And and by the way, we'd been trying to build one of those for over a year. It just really came to life probably in the last 4 months, where it's
Really?
quite effective. Yeah,
Wow.
yeah. I mean, where it's the type of product that we can use it. Um,
Fantastic.
and yeah, but then beyond that, I think these agents are going to do two things, Glenn. One is they either make current tasks or current jobs people more effective in those jobs. So, just more productive in those jobs, removing some of the mundane tasks. So, an example of that is we built an RFP, a way to write RFPs for a big tech company. And normally, those people, it took them 30 hours to get an RFP written. And I guess because you got to talk to the CFO, the pricing people, the software people,
The
whatever they had to
security
do. It was a
people.
long
Yeah. Yeah.
process. Yeah. But we wrote an agent, and this is like 4 or 5 months ago now, but it gets the first draft done in about 12 minutes.
Wow.
And then you can complete the whole thing in probably about 3 hours once you get the people involved, and because you still have to do that. So that just makes the current process a little better, or maybe even a lot better, and it lets those salespeople have more time to do human stuff, build
Amazing.
relationships. Yeah. But the other thing agents are going to do is make what used to be impossible possible. An example of that is something we built for hospitals. Hospitals have they submit claims to insurance companies, and
Sure.
they're massive. They're declined so much, like 15% of the time they get declined. And it's because of errors, in coding. There are a whole variety of reasons, but a lot of times these are human error. But the submission process is so complex, it's hard to go back and fix what's been rejected. And that's why they think it's between 100 and almost like $200 billion a year of rejections. So we built something that could use the AI to go back to the rejections and figure out what's wrong and then create a resubmission. And the first hospital we did that for, it found $17.4 million that could be resubmitted.
Whoa.
And
Well, I hope you're
just think
charging a
about that.
percentage of the findings.
Yeah. Yeah. And but even in a big hospital, that's a lot of money,
Yeah.
you know?
Wow.
And
That's a
yeah, and
great
that's
example.
doing what used to be impossible, making it possible. And in my world, whereas that software example that we use internally, I think that is actually going to impact jobs, maybe in some kind of a bit of a negative way, but it'll also empower entrepreneurs. It'll empower people too,
Right.
so it's got two effects. People that maybe didn't used to be able to write code or couldn't code fast enough, or, you got to live longer than the learning curve type thing. It gets you places faster. But in the hospital example, what's happening, I think, is there's 750 hospitals, more than that right now, that are on the brink of bankruptcy. A lot of them are rural.
Right.
And if we can help them recover a couple $1 million a year extra, we can keep them alive and
Yeah.
keep, to me, it's a heartfelt mission. And then in ones that are already fairly profitable, and maybe they can hire a few more nurses, a few more
Right.
physical therapists, a few more, so that should create jobs,
Right.
hopefully. And, in an area that we all need people to work.
Desperately. Yes. Yeah.
Yeah.
On the job loss issue, and we'll have to wrap up after this, but
Okay.
on the job loss issue, there's an issue of it, whether or not people with jobs are going to embrace AI. And
Hmm.
the people who do not are at risk of losing their jobs. There's no question in my mind. But
Yeah.
it's also the case that, let's just take software development as an example. If you now have a software developer that can be, and I've heard, up to 5 times more productive using
Yeah.
AI, it's a quote from one of my software developer friends, then one argument is, it's not that I'm going to hire fewer software developers. I may even hire more because I can produce product faster, better, cheaper, and
Yeah.
I'm going to beat my competitors to market. So I may actually hire more people who are fluent and capable of interacting with whatever the latest AI capabilities is, because it's a competitive advantage. And this is true we're
Mhm.
using software development as an example, but it could be true in processing invoices or
Yep.
solving claims problems for hospitals. We could actually wind up hiring more people if we find enough
Yeah.
value out of that.
Well, the hospital, told us, the one that we found $17 million dollars for, they were like, "Oh my gosh, we need to hire someone to just do this."
Right,
So we'll be
exactly.
yeah, but I think there are just a bunch of ways this will play out, and it'll play out differently in different arenas. Like, I think private equity firms that are looking to find efficiencies may say, "You know what? Let's go." And I actually think in certain cases, it's more than a 5-to-1 improvement. Like
Really.
like when you put this thing in the hands of my partner, who's like I consider him a genius level technical person, and he understands frameworks. Like he can describe a framework in English on what needs to get done. Like you have to understand enterprise architecture and stuff
Yeah.
to,
Yeah.
it's not like I need to write this much code. He
Right.
thinks huge. Like, and so you take a guy like him, and I almost believe it's like 100-to-1. He has no time, but
Wow.
all of a sudden he unleashes what would take him 3-4 months if he were by himself. And maybe it would take a little team of people to get something done. He can get it done in a day.
Amazing.
Yeah. And And in a case like that, so I think there's that empowerment, and that could create whole companies. Like, it could create, and then, but go to the private equity firm. Some of them may say, "Oh my gosh, I can get a 5-to-1." Your number 5-to-1. CIO, cut your tech team by 5. Get the same amount done with 20% of the people. I
Right.
could see that. Like
Yeah.
private equity firms, a lot of times operate that way.
Yeah.
But then, but then there could be others that say, "You know what? let's let's get 5 times as much done with the same
Exactly.
number of people,
Right.
or or let's get let's do add people in and let's get 10 times done." Who knows? I All those become options now, and I think that's one of the interesting things that we'll see play out over the next couple years.
It's going to be amazing to watch, John. So thank you for sharing your insights. I've learned a lot. I know the audience is going to be very interested in hearing from you. So how can people reach you?
LinkedIn, Jon Nordmark, Jon.
Okay.
um, or just email me, and I see my address down there. It's just
Yep.
jon@iterate.ai on the bottom.
Fantastic.
Yeah.
Fantastic. John, it's
Thank
been a
you.
real pleasure. Thank you.
Thank you, Glenn. Have a good day.
That's a wrap for today's episode of The Scaling CEO. If you found this valuable, be sure to like, subscribe, and share with a fellow CEO who could benefit. If you're listening on Apple or Spotify, please give us a quick rating as it really helps more people find the show. I'm Glenn Gow, the CEO Success Coach. See you next time for more proven strategies to grow your business and leadership.